This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Calm is cracked. The market has one of its worst weeks of the year as the war of words between the U.S. and North Korea escalates again.
New low. Penney, once a dominant force in retail, sees its shares tumble as shoppers stay away from its stores.
Pinot and pot. Why there may be some seeds of discontent growing in Northern California's winemaking region. Those stories and more tonight on Nightly Business Report for Friday, August 11th.
Good evening, everyone, and welcome. Well, after a remarkable string of record highs, investors turned cautious this week, and the result was the second worst week of the year for stocks. The calm that had swaddled the rising market like a warm blanket all year long finally cracked. The rupture came as the war of words between the United States and North Korea intensified, beginning on Tuesday and continuing through today. Soggy earnings reports from some major retailers didn't help either. The result was that down week, the worst in months, with all of the major indexes off 1% or more. But what was almost as surprising as the suddenly blustery turn in rhetoric was that the weekly losses weren't even steeper. That's in part because stocks turned up today. The Dow Jones Industrial Average rose 14 points to 21,858. The Nasdaq added 39, and the S&P 500 was up 3.
The president today did not back down against North Korea, saying the leader of that country will, quote, regret it fast if he acts against Guam or any American ally.
This man will not get away with what he's doing, believe me. And if he utters one threat in the form of an overt threat, which, by the way, he has been uttering for years and his family has been uttering for years, or if he does anything with respect to Guam or any place else that's an American territory or an American ally, he will truly regret it.
China, the world's second largest economy, has repeatedly warned both Washington and Pyongyang not to do anything. Today, it reiterated that idea, and Eunice Yoon reports tonight for us from Beijing.
The Chinese state media fired a warning shot at Pyongyang and Washington over their ongoing war of words. In an editorial, the Global Times, a Communist Party-backed paper, said if North Korea launches missiles that threaten U.S. soil first and the U.S. retaliates, China will stay neutral. If the U.S. and South Korea carry out strikes and try to overthrow the North Korean regime and change the political pattern of the Korean Peninsula, China will prevent them from doing so. This is a significant change from the messaging out of the Chinese government and the state press, which has been calling for dialogue and attempting to get both sides to tone down their rhetoric. But this commentary, and it's not an official statement, indicates that the Chinese are warning Kim Jong-un that if he does something rash that leads to a conflict, he's on his own. And the Chinese won't step in, as they did in the 1950s war, to save North Korea. At the same time, the Chinese are warning President Trump that if the U.S. were to start a war, they wouldn't only be fighting with North Korea, but also with China. This may be China's way of hitting home the risks involved in escalating a war of words. For Nightly Business Report, I'm Eunice Yoon in Beijing.
North Korea appears to be a poor country, and it is. And yet it has managed to develop ever more sophisticated weapons and generate nuclear power. Those are very costly things to do. So Michelle Caruso Cabrera followed the money trail to find out where North Korea gets its cash.
The short answer, they sell commodities to China. That's very well known. And less well known, they manufacture and sell weapons, mostly to African countries. They also export North Koreans as a form of slave labor in places like Russia, China, and Africa. And in the category of weird, they design and export huge brass statues. We know all of this because of this. This is an annual report from the UN panel of experts. Investigators who work for the UN and put out a report every year on North Korea's progress toward nuclear weapons and whether or not countries in the UN are enforcing the sanctions imposed by the UN. The sale of coal and minerals, like I said, widely known. Let's move on to arms sales. Just one of many examples in this report. The investigators discovered North Korea sold automatic pistols, assault rifles, anti-tank missiles, and anti-personnel mines to the Congo for use by the Presidential Guard and special units of the Congolese police. This is a photo of 30,000 rocket-propelled grenades seized from a ship in the Suez Canal, which were manufactured in North Korea. They're tough to see. They're underneath the tarp there, underneath that dirt. The North Koreans do all this through front companies. For example, they have a company called Glocom. That's short for Global Communications. It makes military equipment you see here in this photo that's in this report. That company, by the way, advertises on the internet. Moving on to labor, this letter shows that a North Korean construction company built the new military headquarters for Namibia using North Korean labor. And North Korea also builds enormous socialist-style statues like this one in Senegal. UN sanctions were imposed on North Korean statues back in 2016. For Nightly Business Report, I'm Michelle Caruso Cabrera. Back to you.
We have been talking a lot recently about how rising geopolitical tensions could affect the stock market. But what about the economy? Steve Leisman did some digging.
Suddenly, economists have a lot more than just the next Fed rate hike to forecast. Geopolitical risk has joined the list of uncertainties clouding the outlook. Others include the risk of a government shutdown as soon as September and the chance that meaningful tax reform may not happen this year. All the other risks, though, when it comes to geopolitical risk, seem to pale by comparison. Carl Weinberg from High Frequency Economics sees huge downside potential from the North Korean situation. He writes, quote, if North Korea can threaten world trade, even with conventional weapons, it can threaten the global economy. The global financial system is vulnerable to the same disruption of trade. J.P. Morgan calculates the level of geopolitical anxiety with an index and unsurprisingly finds it elevated right now. Other notable peaks from the index include the Desert Storm War in the early 1990s, the 9/11 terrorist attack, and the Arab Spring. J.P. Morgan says its look back on other times when the index has spiked finds these geopolitical rules of global risk. First, it's the rule, not the exception. Second, though, it has delivered 4 of the past 6 recessions, mostly through an oil price spike. But third, there's a short-term market reaction, but there's often a big retracement within a few weeks or months. Goldman Sachs points out that for decades, investors have been rewarded for betting that a flare-up in the North Korean problem would go away. The question is whether the real situation with North Korea's advanced nuclear program and the rhetoric from both sides have changed the situation enough so that this time the market should be less complacent, that is, more concerned. For Nightly Business Report, I'm Steve Leisman.
Inflation has been soft for 5 straight months, raising questions about whether prices will rise enough to hit the Federal Reserve's target level. The Labor Department reports that consumer prices rose just 0.1% last month. That was less than the forecast. Now, the cost of cell phones continued to decline, as did the price of used cars and hotel rooms. Some Federal Reserve officials have called these drops transitory, but the ongoing softness is pushing against the idea that unemployment at a 16-year low will help inflation accelerate as the Fed wants.
And the head of the Minneapolis Fed says that report on consumer prices is yet another reason for the central bank not to raise interest rates in the near future. Neil Kashkari wants to see clear evidence that inflation will rebound before deciding where to go with monetary policy. Mr. Kashkari has been the lone dissenter against the central bank's 2 interest rate hikes this year.
Still ahead, are under-the-radar stocks your best bet for the long term? Our market monitor has a list of names he recommends.
Anthem will pull out of Virginia's individual Obamacare market. The company is citing uncertainty from the federal government, including the president's indecision on whether to continue paying the subsidies which make premiums affordable for some consumers. Anthem already announced that it would exit marketplaces in Wisconsin, Indiana, and Ohio. The insurer has until the end of September to decide whether it will leave more exchanges.
While the stock market appears on edge because of the situation with North Korea, one group is getting a lift: defense company shares. Morgan Brennan shines a spotlight on the sector.
It was a week shaped by an escalating war of words between North Korea and the U.S.
They will be met with fire and fury like the world has never seen.
And while the broader market sold off amid the rising geopolitical risk, defense stocks hit new highs. The sector's been outperforming the S&P 500 all year, with the iShares ITA Aerospace and Defense ETF up by almost 20%. But you'd be hard-pressed to find an analyst who doesn't believe this sector could go even higher. Richard Safran of Buckingham Research cautions it's notoriously risky to bet against defense at a time like this, a time when global spending is ratcheting up amid geopolitical threats, and not just because of events this week. Defense spending runs in 20-year cycles, and an upturn has already begun, tied to equipment upgrades rather than economic growth or even who's in the White House. Safran says the aerospace industry is dependent on orders and equipment deliveries. More defense spending implies more orders, and that could lead to gains in the stocks. Couple that order backlog with decent dividend yields, and defense stocks are defensive. Safe haven investments like utilities or gold that investors flock to when volatility increases and the broader market sells off. The very scenario that unfolded this week. For Nightly Business Report, I'm Morgan Brennan.
Shares of Penney hit an all-time low. The beleaguered retailer lost more money than feared in the most recent quarter, and all of its attempts to revive sales just don't seem to be sticking. The company reported a decline in a key sales metric, making it the latest department store chain to announce dismal results. The stock took a beating. It fell 16%. Courtney Reagan has more on Penney's troubles.
JCPenney isn't inspiring any more hope than most other department stores this week, leaving investors feeling shy of getting their penny's worth. Going out of business sales at nearly 130 stores, plus higher levels of shoplifting and damaged merchandise, led to a bigger than expected loss for the retailer, even with sales in nearly all categories improving. On the flip side, the liquidation sales are helping JCPenney clear merchandise going into the most important part of the year.
They do go into the second half of the year with a much cleaner slate. They continue to get a nice contribution from appliances. The CEO mentioned on the call that they've started August strong in terms of their back-to-school selling season, and so still a very tough setup. Lots of hurdles remain. But we would say it was a bit of a cleaner report.
JCPenney still thinks it can hit its previous earnings forecast for the full year, but analysts and investors aren't so sure. The department store's online sales are growing, but with approximately 85% of sales still done in its physical stores, traffic remains a key issue for JCPenney, like it does for other department stores. Shoppers are going elsewhere, leaving the group in a tough spot, regardless of new strategies they're deploying.
You really have to focus on that value, and you have the off-pricers, TJ Maxx, Burlington, and Ross stores, which in the consumer's minds are a better value right now. So they have to match the values of the off-pricers, and they have to figure out this convenience factor that right now Amazon has them by the throat.
And that has many investors wondering if this is as good as it gets for department stores. For Nightly Business Report, I'm Courtney Reagan.
The golf company Acushnet bogeys its quarterly results, maybe even double bogeys, and that's where we begin tonight's market focus. The company reported a worse than expected drop in sales as fewer people bought Titleist golf balls and clubs. Acushnet also sees weakness ahead, slashing its revenue outlook for the year, and that pressured shares. They carded a snowman, down 8.5% to $15.59. I've had a few of those. YogaWorks had a rough start in its first day of trading as a public company. After delaying its IPO back in July, the yoga chain debuted on the NASDAQ today, pricing its offering at $5.50, low end of its range, and shares went downward facing dog, falling nearly 12% to $4.85. The Canadian telecom company TELUS said higher spending on efforts to attract and retain customers are eating into profits, did so in the latest quarter, and its results, as a result, missed expectations. TELUS said it saw an increase in the average monthly wireless bill as customers streamed more online content. Nevertheless, shares fell a fraction to $35.38.
Lawyers of plaintiffs suing General Motors for faulty ignition switches allege the automaker must pay $1 billion in stock as part of a settlement. But GM says it didn't have any knowledge of that settlement between the plaintiffs and the trust set up for creditors of the old GM, which is what was left behind when the government bailed out the company. General Motors says it believes the trust colluded with the plaintiffs' attorneys to come up with that $1 billion amount. GM shares today were up a tick to $34.93. The chip maker NVIDIA reported earnings and revenue that beat expectations, but shares still fell as analysts were disappointed by the performance of the company's data center and autonomous driving businesses. Shares were off 5% to $155.96. Intuitive Surgical, which makes robotic medical equipment, said it is planning a 3-for-1 stock split. If approved by shareholders, investors would receive 2 additional shares for every one that they own. Shares of Intuitive Surgical rose 1% to $942.25.
Time now for our weekly market monitor, who's finding opportunity in some small cap names he says you want to own long term. This is his first time joining us on the program. He's Matt Finn with Thrivent Financial. Matt, welcome. Don't be nervous. Sue and I are very nice people. You're going to enjoy this. It's going to be painless. We're going to begin by taking something that cures pain. Your first pick is a liquor company. Tell us which one and what they do.
Hi, Tyler. Hi, Sue. This is a really great company. MGPI Ingredients is a low-cost wholesaler of liquor to branded companies like Diageo. So as you may know, brown liquor sales have been increasing in recent years after decades of decline. And that benefits them because the profits from brown liquor are higher than white liquor. So you get decent sales growth, better profit growth for the next several years.
People are drinking more ryes and bourbons, I know. Do they make bourbons that whose brands I would know, or do they sell them as private label, or what? I don't understand quite what they do.
Right, they wholesale to Diageo, who makes the Bullet Rye brand, for example, Seagram 7, and hundreds of other brands. They actually supply the wholesale liquor, and one of the other nice things about their business is they sell one-year-old brown liquor for one price. If they age it 4 years, they sell it for 2.5 times that price. So they are putting liquor into inventory, which helps their margins as they sell the older liquor over time.
And if you have too much of that brown liquor, you might need a little coffee, which is where Cott Corporation comes in, right?
Yeah, Cott Corporation is a solid business. They are one of the largest companies delivering coffee and water to homes and businesses in North America and the United Kingdom. What management has done is they sold the declining private label beverage and bottling business. So what you're left with is decent top line, better operating profit growth, and lots of free cash flow.
Kirby Corporation is your third choice. What do they do, and where do you see the price going?
Well, Kirby is a cyclical company. They are one of the largest companies that transport refined products and chemicals on barges in the Mississippi River system in the Gulf of Mexico. Their sales were $2.5 billion in 2014. Now they're $1.8 billion. The stock's been cut in half. We think that business is going to tighten up over the next several years, and you can get that stock back to close to its prior highs.
Now, what about the time period? How long would you recommend the individual investor hold these stocks?
Well, I think that MGP Ingredients is a longer-term hold. I think that Cott Corporation, if it got ahead of itself in the mid-20s, we may look to cut that back. And then in the case of Kirby Corporation, I think that's a name that you hang on for the upcoming cycle, which could be 3 to 5 years.
Matt, it was pretty easy, wasn't it?
Yeah, it was great. Thanks for your time, Tyler. Thanks, Sue.
All right, Matt. Matt Finn with Thrivent Financial.
Coming up, is there a budding battle emerging in California's wine industry? Here's a look at what to watch for next week. On Tuesday, Dow component Home Depot is out with earnings. We'll find out if home improvement spending remains strong. On Wednesday, the minutes from the last Federal Reserve policy meeting will be released. On Thursday, Walmart reports its earnings, and investors will be looking to see if its in-store investments are finally paying off. And that's what to watch next week.
The Islamic State may have used eBay to channel money to an operative in the U.S. As first reported by the Wall Street Journal, the man who allegedly received the payments was an American citizen who was arrested last year. According to a recently unsealed FBI affidavit, the American citizen allegedly sold computer printers on eBay as a front to receive payments through PayPal.
Google's CEO late yesterday canceled a meeting to discuss diversity issues after individual employees were singled out online. Questions submitted prior to the meeting had been published online, along with the employees' names, and several workers expressed fears for their personal safety. As we reported earlier this week, Google fired an engineer who posted a lengthy memo suggesting that women are less capable than men of working in high-tech jobs. CEO Sundar Pichai has come under fire for his handling of the issue, and today, David Brooks, columnist with the New York Times, called for his resignation.
In California's wine country, a battle is brewing between wine and weed. The state's legalization of recreational marijuana is prompting some cannabis entrepreneurs to set up shop where grapes grow in the northern part of the state. Aditi Roy has the story from Redwood Valley, California.
On a warm summer evening at a vineyard in Sonoma, California, the grapes are ripe, the wine is flowing, and the food is abundant.
Isn't it good? Man, to open up that jar of blueberry muffin.
But this isn't your average farm-to-table dinner in wine country. It's a chance to pair food and wine with pot.
Pairs nicely. All right, man. Thank you very much. You mind if I finish?
It's hosted by marijuana entrepreneurs, hoping to show longtime winemakers like Dennis De La Montoya that wine and weed go together in business as well.
Hey, I'm curious, are you thinking about ever infusing a wine?
De La Montoya, a sixth-generation winemaker, says at the very least, he's interested.
I think I'd be foolish if I didn't look at those opportunities.
As California prepares to hand out licenses to marijuana businesses on January 1st, many are eyeing Northern California's winemaking regions as a pot of gold. Some industry experts say 1 acre of cannabis can be worth at least $1 million, while an acre of wine grapes in Sonoma County only brings in just under $200,000.
How much marijuana do you expect to be processed through here?
A lot.
Michael Steinmetz is tapping into the budding market. He's a marijuana entrepreneur who bought this 80-acre property in Mendocino County, California, that used to belong to Fetzer, one of California's biggest winemakers.
The opportunity is massive if we get it right.
His company, Flocana, will eventually have a research division and wellness retreat here. They'll also process the marijuana that local farmers grow, helping them scale up.
We just have to grow and let them do all the sticky work.
Cyril Guthridge is one of those farmers.
We live in a very rare Mediterranean climate, and Mediterranean climates lend very well to growing cannabis.
But among the bud growing in these fields are seeds of discontent, with longtime winemakers worried that pot farms will poach their labor and customers.
They are a little bit nervous about the cannabis industry coming into Sonoma and how it's going to impact the tourism dollars for the tasting rooms around here.
And then there are the skeptics, like Sonoma County Supervisor Linda Hopkins, who says marijuana may not be as lucrative as some people think because prices will go down as supply increases and regulations will be tough.
Cannabis is going to be the most highly regulated agricultural commodity in the state of California, period.
And while some winemakers are nervous, others are still hopeful that weed and wine will pair well.
I think that there's an opportunity for both industries to flourish in this community.
Here at Flocana, they plan on launching in the fall. The region also recently hosted its first ever Wine and Weed Symposium to better educate winemakers on the cannabis industry. It was a sold-out event. For Nightly Business Report, I'm Aditi Roy, Redwood Valley, California.
That's going to be fascinating to watch.
Yes, have a car service ready to take you back
Totally
from
have a
those
car
tasting
service. All right.
events.
On that note, that does it for us tonight. I'm Sue Herrera. Thanks for watching. We want to remind you this is the time of year your public television station seeks your support.
And I'm Tyler Mathisen. We thank you for your support. Have a great weekend, everybody. We'll see you Monday.